Good morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. And it is based on structured trades. They are available to all of you at no cost in the Bookmap Discord TraderLab community, as well as a library of webinars on the process that you're going to see here every day. And like everything, any trades you see anywhere need to be vetted. You need to know how they fit and if you can actually execute those trades with an edge. This is really the work side of developing the business side of trading. It is the time it takes to become familiar not only with market mechanics, which are not plug and play, but are always evolving and developing based on participant behavior, but to identify the conditions that need to exist to give you the probability of extracting an edge with specific structured trades. That's the business. If you're interested in gaining information on the business of trading and potentially creating a plan that gives you a statistical edge and potentially sustainability in this business, you're all invited to the Bookmap Discord TraderLab community. And remember, there's no cost. And if you're in YouTube, there's a link down there. If you're interested in TraderLab, all you need to do is click the link and verify your Discord email. It keeps the spam out. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, this is not a trade calling room. This is for educational purposes only, but if we get to real time, as always, we will go there, and not to call trades, but to anticipate behavior. Also, this is based on structured trades or building out trade plans. So I'm going to share with you this morning's post pre-RTH open, so you can understand a little bit about how you might prepare for a day like today. And number one, should you be trading it? But the other part of it is, do you know how to trade it without chopping yourself up, being stimulated by FOMO, hitting loss limits, or even worse? The thing we need to know in trading, at least in my opinion, is where we have an edge and where we have low probabilities of success. And when we have a low probability of success, subject to our plans and our vetting, we either need to stay out of the market or to become extremely patient, because our metrics have shown us that in certain conditions, alignment might be more difficult for us, depending on our development, and we might take more losses attempting to get in alignment, especially in the current condition of the market. And why might this be the condition, you ask? Well, let's get into that. Let's go take a look. And if you're visiting in YouTube, thanks for stopping by. First of all, we have to take a look at the higher time frame. Now, putting it, as they say, in a nutshell, I wonder who came up with that. Trend is up. However, what happened? Well, we did not facilitate trade. In other words, when the market's moving, value, which is this yellow box where 70% of the volume takes place, is going to be moving directionally. So here, directionally, lovely, going north, except, now this is Wednesday, last week. Now, Thursday, even though we had an up day, and this orange line is called a microcomposite volume point of control. Let me translate. This is the outside edge. This is the swing low. So swing high, swing low. And all the volume that has happened in here for this whole swing is concentrated. The highest volume is right there. Think of this like shopping. If we find too high, the buyers will say, nah, it's too expensive, and we can come back to retail. It's like in your store. You go to the store, and if the price is too high, you're just not going to buy it. Or if you absolutely have to have it, you'll buy it. But you'll notice there's volume tapers off. What does that mean? I'm not paying that. Less buyers. You run out of buyers, what happens? Well, the sellers have to lower the price to advertise for the buyers. The buyers were willing to buy S&Ps here at the retail price. Think of it like shopping. Well, if this is too low, then we can go higher. Now, we get news of the war, the geopolitical event, and what happens? Well, we open. This is very important on Thursday. If you haven't watched Thursday's stream, you really should, because you can learn a lot. So what we did in the morning is we opened lower, tested this. It was a short, and the target was here. Now, what happened was we got down somewhere around here and then turned around, took this out, and came up to our next location, which was here. Okay? And then that was too high. We came back across the range and got here. So the thing with trading intraday is this thing rotates, and it can, abuse you like it abuses all of us because of what? Randomness. So ultimately, this was too high. This is retail. This is too low, and that was our target. As they say, who knows? Now, we get everybody in on Thursday short. Oh, it's the end of the planet. Oh, maybe. But what happens? We open higher. What happens to these shorts? Under the bus. Where do we come down? And where do we open yesterday? Against what? Retail. What do? Buy stops are here. Buy stops, I should say a target is there. Buy stops are here. Right there. Of here, and then of course this might be a target somewhere in the future. This is yesterday. Now, what did we do? Let's take a look. Longs under here, sell stops, got taken out. Weak longs, and going to zero. Shorts in this leg, buy stops here. What do? Take them out. So we take out the longs, we take out the shorts, and now we open where? Here. What is this called? Fair price. What do we anticipate in a fair price? Balance, and that's called balance, and it becomes what's called mean reversion. That's outside in trading. Now, there's a couple other little pieces just to make it joyous for you. 60.84 quarter is the I'm not paying that, and 54 is the too low. Too high, too low, retail. So what we can do in this, and nobody knows, don't forget. Now the trend is up, don't forget. We can slosh back and forth in here, abuse everybody. This is called value area low, where 70% of the volume took place yesterday. This is value area high, where 70% of the volume took place the day before. These are possible targets on either side. So this one, and maybe this, and anything can happen in between, And as Dirty Harry used to say, do you feel lucky? Well, do you? Are you guys following? How we doing? How's everybody in YouTube today? Don't let your head bounce off the desk. It's not good for you. Now, let's take a look at this. Now, I'm going to go into, let me get the Bookmap here. Now, all the levels you see here are on Bookmap, as well as developing levels. This is the RTH open. Now, let's come back and take a look where everything is located here. This is that micro composite, the retail price 67 in the intermediate time frame. This is the RTH open. And where is yesterday's low? It is 66 quarter. So basically, right about right here, right in balance. So right there, the open. So we're opening in balance, a hair outside of yesterday's range. Yesterday's low is 66.25. So we're opening right here. It can't get more balanced than that. And there's no precision, but you know, horseshoes and hand grenades, right? That's the MCLVN, the downside, the low side of it. This is the value area low. So the idea of this is to potentially come out here and go there. That's that outside edge. Or to come down here, get here, and maybe get to out here. No clue. You see, so when the no clue thing is, yeah, it could do either, it could do both, it could do neither. So now, how do you trade this thing? Great question. So what do we know starting out? Oh, first of all, what we anticipate is two-sided trade today. Balance. Why? The market's at a price it really likes. Because in the intermediate time frame, this is the fair price. So if we're back at a fair price, what might we do? What do we think? What's too high? What's too low? And what's fair? And it could do anything. And don't forget news inputs, tweets. You know, we have a lot going on. FOMC tomorrow. Anything can happen at any time. This is trading. By the way, if you have questions, please post them. I'll do my best. Let me read you the context. Are we opening out of range? A little bit of a gap. I think we can call that a gap, maybe, you know. A midget gap, no offense to small people. Is it responsive? That means, do we get buying? So what do? We are looking, since we're in balance, there's really not much to do with this except try to operate in it. Hold on a second. 82 half. I think I've got a bad number sitting over here. Yeah, we don't need that. Okay, sometimes these levels. Hold on a second, guys. Whoop. Well, that didn't help, did it? Sorry about that. Let me try this again. Wow. All right, I'm not going to mess with this. Seems that came back in, so that looks correct, unfortunately. Let me just get rid of this. It's not supposed to be there. Okay. So RTH open. Now, my first trades, and I'm not saying this is good. This is my least favorite condition to operate in. It is not easy for me. There's no holy grail. I do know I don't want to trade inside. All my trading in this condition is what's called reversion trading, or outside in. Now, I have to be conscious that in my perception anyway, I know I can have the following. The higher time frame trend is up. So I suspect that the lean is going to be to the upside. The other part of it is, since it's balanced, I can be rotational. So I can be trading from either side. And I know if I come out either side, the first hour is high or low, that I can fade this back inside. So I'm prepared. I'm only trading outside in. And I know the higher time frame is up. So I'm kind of leaning a bit towards the upside, but I just trade whatever shows up. So the market's opening, let's call it a hair outside of balance. And what we want to do is fade it back into balance. So we want to look for retests of the previous range and the previous value area. The value area, and this is a little more, so value area low This is the previous value area. This is a potential target. We get up in here, we can come across the range. If we just mush around, remember, outside edge, higher time frame, we can just slosh. If I come out the bottom, then I can come down here and maybe here. There's over 90% probability, past performance not indicative of future results, to hit the ETH higher low. So we got to be conscious of that. And also over 90% probability to take out the first hour's high or low. And about a 30% probability to take out both the first hour's high and low. So go figure, right? So higher time frame up gives us a bit of a skew to the upside, but it's equal opportunity to be thrown under the bus. Very important to know that. The other thing that's important to know is, do you have an edge or do you have a trade plan for the current condition of the market? Now, you may say, well, do I just take longs? Do I take longs and shorts? What do I do in this? Well, this presents, I would say, the challenge, because our nature is to be drawn back to retail prices. So in fractals, and right now, the higher time frame is not really active here. It's pretty much local trading and algos. It's pretty much us. So we're basically picking each other's pocket in this, unless, of course, something changes. So remember, the lean higher time frame is up. The developing time frame, if you will, or fractal, is lower, or balanced, two-side. So let's go take a look at what we have. I'm going to talk to you about structured trades. By the way, if you have questions, please post them. This is just the kind of day where it's good to stay in the Barca Lounger or go to the pool. Now, here's the caveats about a day like this. And I always talk about this in TraderLab. This is where you can get chopped up easily because the range is compressed. So timing of entries, risk management, and when I say risk management, I'm also talking about FOMO. I'm talking about exceeding your loss limits and the lunatic under the hood, Hyde, as I call it, Jekyll and Hyde. Hyde can take over and you lose control, and you will have the potential to overtrade. Rotations are tight. Also in this condition, you really need to, in this condition, you need to be thinking a bit like a scalper, but not be a scalper. You need to be thinking about short targets, getting risk neutral, discipline on entry, especially depending on the range you have for the reversion. So that makes this really difficult trade. So, and I always say in TraderLab, you don't have to do anything. Nobody says you have to trade. I think what it is we're not in the business of action. Most of us are, I understand most of us want to trade. Trades all look the same when they start out. What's the difference when you have a trigger up here and it goes 3 points versus you have the same trigger someplace else and it goes 20 points? The condition is the difference. The context is the difference. And what we don't know, of course, is what it's going to do. Let's look at the first trade. Now, I trade a lot in this, and it's my least favorite condition. So don't think I have no magic 8-ball in this thing. I take more stops in this, and I have to be very careful for myself, because when I start in this, I don't know, really early on, and this is why I always suggest patience. When in the early going, when the market first opens, we really have not much to lean on except what we perceive to be the context, balance, and the perception of the possibility of two-sided trade. Now, if we get inside yesterday's range, it does give us targets on top up around 84, 85, and it gives us targets down here. This is our kind of our sandbox. And I think it's more like sand in the face, but let's go take a look at this thing. So RTH open is here. This is called developing volume point of control. Now I'm going to label these for you. Now, I use these as targets, and I always get questions about this, and this is called VPOC migration. And for as many years as I've been sharing this in TraderLab, my process, I've said this is the last place to trade. And many traders, when they're developing, are mechanical, which I understand. We all start out mechanical because to become unconsciously competent, we have to start out someplace, and that is with recognition, identification, and but what is it that's happening right here? This is the language of the market. Now, I don't use any indicators. Been there, done that, not interested. Instead, I read order flow and volume. This yellow line represents volume. So here's what it is. The first volume starts at RTH open. I get selling right at the open. And I move higher. I see my buying. Now here, as far as I don't have any clue, I am the clueless and proud of it. Clueless means not ignorant, just who knows. This is the new retail price. So too low, too high. Watch. Now, this is call it a higher level reversion structure in fractals. This is the new retail price, so maybe too high. I got this is where order flow and a in-depth understanding of market mechanics comes in. Imagine you're trying to learn a foreign language. Have you ever done that or play a musical instrument? Remember, if you've ever tried to learn the piano or anything, it's very much you look at a scale or a bunch of notes. They put it on your piano, so you know where C sharp is and F flat, and you're looking at that to see where the keys are. It's the same when you're learning this, because to read order flow, it's going to start out with what's going on. I got my buy stops. What's happening? Buy stops, absorption. Why didn't the market keep going? Well, those guys, that's the passive side. Those are limit orders. So the buyers are here, stops, and these guys are taking the other side. I now have more volume here, of course, because we've been open about 40 seconds. So more action here than there. But I know this is too low. So right here, now my volume point of control shifts lower. This is very subtle and advanced. What it suggests is right now, and don't forget, we're only in this thing, not even a minute. This is the new retail price. This is too high. Language of the market. Remember what's up here? Absorption. I come up here, going to the moon. So what do I know? I hit the VWAP, and if I think it's a long, mechanically somebody might buy this. If you understand context, this is not a long, because we are coming here, and potentially, remember why, two-sided. So what is the market from yesterday? Wasn't it longs? Well, for me, the first trade is a short. And, like you, I want to hit myself with step on a rake a few times. Might be better. So right here, too low, too high. Buyers here, more icebergs. I'm below this. So the icebergs are more aggressive here. Break low. This is my short here. And again, this is just really hard. Now I got short over here, but that's because of the order flow. As soon here, if I open this up, let me try to. So there's absorption. Look where I come. You see this microstructure? I'm going to show it to you. And again, I'm going somewhere where it could be nasty. The buyers were here. The sellers got below the buyers. Buyers are here. Resistance is there. There. Buyers are here. Teeth start to chatter. This is my short. I'm leaning on this microstructure. This is more advanced. You could also take it here. You could also take it there. Then I get my VPOC migration. Now I have to get risk neutral. And this is my targeting down here. Okay, that's my scale. Feeling pretty good about it. I said, well, okay, I got that right. Now, here's what I know. I have this as a target, and I have the ETH low. Remember, over 90% probability, take out either ETH high or low, and I got that. This is my target. Okay, so I come up here, teeth are chattering. I figure, oh, toast on this one. And but where do I come? Let me show you. This is I developed this. I'm just saying as I did it for myself. What do I know? I know nothing. What I know is this is too high. What I know is that is too high. What I know is this thing comes in the book. Look at this liquidity marker. And you see how dark this is? This is the heat map. It is showing somebody came in the book. Why would they come in the book? Now, like everything, we don't know. So the answer does not exist until hindsight. Why did they come in the book? Well, let's see what happened. It looks like they pulled. I mean, some of it traded out. Here's 198. We're in here. And this guy pulls. So more icebergs going off. But what is important to me? This. Where did this come from? Participant behavior, order flow. It's there. So I'm anticipating taking a stop, and that's okay. Right here, I see a sweep, and I'm thinking, oh, you know what you say to yourself. I can't say it here. And I'm thinking I'm going to get taken out. And the fact I think it doesn't mean anything. Where does that voice in my head come from? Well, I'd like to find out because I like to track it down, but it's the lunatic under the hood. Fight and flight, FOMO, fear of loss, and the voice in the head says, oh, you're going to get stopped out. You should bail out. Well, after doing this, going on 46 years, I have learned that the voice in my head is trying to protect me, but is clueless. So I hear the voice in my head, and when I hear it, I'm saying as well, my trade plan requires me to take a stop because until it fails, it hasn't. And where would it fail? Well, up here. This is another short or nothing. And then where am I trying to go? Back here. Back there, where the buyers were. So where did the buyers take over? Right here. So let's just say you take a short there or an ad or whatever you do. Where's my buyers? The sellers were here. The buyers are here. And the sellers got thrown under the bus there. This is your reversal. Up here is your reversal, right there. See it? See that? And the sellers are under there, sell trigger. Sell trigger, just as an example. Okay. Now, in balance, and I'm very specific about balance, you do not trade from the middle because the idea is to come back here. And here's how you know you're in balance. VWAP, VPOC, remember retail, except in the developing time frame, and mid is somewhere around here. Let me just see, where are we here? Full session. Yeah. I lost the mid. It's got to be somewhere over here. I don't know. Got to be right around there somewhere. So anyway, another short, buyers were here. Now let's look at this. Let me show you a buy trigger from the other side. Now, the fact it's a buy trigger doesn't mean you buy it. Here's how you can use this. And this is really getting the micrometer out, and this is more scalpy. Now, I'm not a scalper. It's a waste of time and risk. So what I have to do is be very disciplined, because I need range. If I don't have range, I have to be very disciplined to try to get outside to come around, because balance is two-sided trade. So it's a difficult condition for me. I'd take more stops in it. Just, Now, if it has range, it can be, quite nice. And we don't really know how much range we're going to get. Here's the problem. And I call it a problem because it's a problem for trading. That's all. It's not a problem for the market. Market's doing what it does. How do we operate in it? So this is another short. There's your trigger. My stop is still there. Where's my support? It's here. This is another scale. If I take a short here, this is my scale. Why would I scale here? Balance is coming across the range, and the buyers were here. So the buyers are here, sellers are there. This is my little sandbox, and it is a little sandbox because I can't enter out here. My entry would be like in here, and I have to scale ahead of this. So look at the range I'm working in. It's workable, but we're talking about a 5-point rotational range. And then I'm holding short, going for this. Watch now. And I'm sitting here. I'm going to tell you, when I'm going through this, I am annoyed, emotional. Right here is, now this is the fair price. The nature of this is to do this. Okay? Now, the fact we come here and bounce off is encouraging for about 30 seconds. But where's my buyers? Let's come back. My buyers were here. I took these stops out here. Thanks for playing. Time for a gift basket. What happens here? This is absorption. Absorption. Now, I don't know. I see the delta. It's going to zero. Where were my sellers? Here. They were there and here. So let me put, in this line, I'm going to just leave it there. So absorption is here. Buyers get above the sellers. This is a buy trigger. Now, when I'm showing you these triggers, you can also use them for trade management. And what I always suggest in TraderLab is you develop a specific plan for this. And trade management in CHOP, or balance, or rotational trade, if you will, is a different plan than what we do in other day types with different range. I find it, again, more difficult, and I'm more active, and I don't like being active because every time I put risk on, I'm putting on my full risk, not necessarily the number of contracts. Let's say my stops, though, are always pretty constant. So when the range compresses, I'm really, my potential goes down, and my getting risk neutral is more difficult. If my timing is a little off, which of course it is at times naturally, and my potential return for the risk is compressed. So what's happening in this condition is call it my risk reward ratio, my potential net, my commissions go up because of the frequency of trading. Everything is now moving against me statistically. I can still work in this, but it's a lot of work. And of course, I never know the outcome. So my job as a trader is to trade and to only take trades that have an edge. And I do understand my edge because of where my location is somewhat limited currently, unless there's an external input or the condition of the market changes. So let me show you. Hope this makes sense. Now, going along, resistance. Now, when this happens, I'm thinking right here, I've got a good shot of breaking down. And, and that's all fine, having a wonderful time. But what else do I know? Buyers are here. Break high. This is a buy trigger. Now, subject to your plan, you could be trailing a stop here because of this and a trigger. You could be out. If you're trading reversion, you could be taking a long. And here is where it shows up. Here. Why? Buyers are here, buyers are here, sellers are here, no bueno. This is a buy trigger. There's support. There is support and absorption. Okay? The buyers are above these sellers. There's the buyers. They're absorbed. Why didn't it go down? This guy comes down here. Sellers. Why does it go up? Absorption. There's the iceberg. Where do we come? Back to resistance. Let's watch. I was sitting short here too. I took, I've just been, I don't want to use the term scalping. I'm just trading the rotations. This one, same trade. Outside edge, stop picks, mean reversion. I'm coming back here. And I was looking again. I'm still trading because I'm looking for it to come out the bottom. That's what I'm looking for. Not such a good idea maybe, but that's what I'm looking for. This hits right before the news. And that just was like, and I did not get scaled here. It missed me like by a tick. you know how that quote feels, right? And then I get this, and I got stopped. Okay, so I took a stop. Now these guys come back in again. And we were talking about this in TraderLab. So here we came up. It was right after the news. I have these guys come in. I took a short. Got scaled, holding the short, comes over here. I get taken out. It's just joy. Liquidity comes back in here. So here I'm kind of going, what's going on? I get the liquidity in here, and I understand. Now, so I'm okay, but I'm working hard, and I'm not getting much out of this. I'm getting in, I'm getting a scale. I'm making some profits. If I'm getting a scale, I get taken out and scratch. My broker's sending me roses, loves me, and I'm not really gaining traction here for the effort and the risk. So I have to follow my plan. I know where I'm trying to go, but here's the problem. I got a problem. Let's talk about the problem. The problem is to keep going short. I can keep trading the short side, but I'm inside of yesterday's range. I know the higher time frame is up, and I know I've got targets up here of this. Okay, this is my target. Remember where this came from, right? Let me show you, because this is very important. This is the retail price in the higher time frame. We're sloshing on both sides, okay? Nasty, outside in, outside in. This in an uptrend, don't forget. This is value area low, and 84.25 is the outside edge of this distribution. What you see me doing in the short time frame is a manifestation of the same behavior, but short time frame. So I'm doing this rotations in the developing time frame, but in the higher time frame, it's the same. Think of this as fractals or Russian dolls, Matryoshka dolls. They're inside each other. So if I'm trading, if I think it might go up, then I'm going to be trading towards this. If I think it's going to go down and I'm trading outside, I'm trading towards this. ETH high and low. That's it. And it can trade either side. So I'm just giving you the sense of why this might be our target. And it's because we're back inside of this range, and anything can happen. It's abusive. And trade management, risk management, number one, loss limit, managing FOMO, big deal here. Here, let's look at this guy. Remember this one? You should screenshot this. This came up. I was taken out, and of course, grumbling and not happy. Buy sweep suggests counter rotation. I come up here, and I am, as they say, the confused. And when I say confused, I'm saying is I don't, it's maybe in transition here. So I don't have anything here. I am aware of this. and I'm aware of what happened here. I'm aware that when they pull, the market went higher. I see them come back in again. Right here, we break, they come in, I take a short here. Got scaled, got taken out. Okay? Just telling you, that's just the trades I'm taking. I get a sweep here. So you see the sweep, the liquidity comes in. That's a short right here, I should say. You got liquidity here, sweep, looking for down rotation. This jumps in. I lean on the liquidity. This is mean reversion. That's the mean, looking for it to fall out the bottom. Not so much. Scaled, taken out, sweep into this liquidity. These guys pulled, right? So it's like, oh, come on. Sweep, taken out, put the trade back on, back here. You can see how many trades I'm taking here, and it's really annoying. That's all I can tell you. Let's look again. Well, hold on. That is about it. That's the last for me. And remember, we're inside of yesterday's range. The lean is to the upside. Hard day to trade for me. Just a lot of trades, and when the dust settles, sleeping in would have been better. But this is where we're looking to go, and possibly here and here. Remember, value area. Let's give you some statistics. And this is really on the edge of yesterday's range. So let me see here. The statistics were skewed slightly to the downside, but considering we opened a hair outside of range, and the higher time frame trend is up, it gives me a lean a little bit more to the upside, just because of the multiple integration of time frames. Getting to the value area low is about a 68% probability. Getting to the naked volume point of control, which is the retail price from yesterday, remember, Fractals, is about a 68% probability. Previous value area high, 56%, ETH high, 55%. But, so this is kind of the lean, okay? But hard trade, you could see, right? And you can't, in my opinion, buy it here because of the balance, because of this kind of thing. You try to get involved here, you're just going to chop yourself. So it is very much what's called reversion. So if you don't have location, you don't have a trade. Your job is not to chase the market. Your job is to align with the market. And if you don't have trade location, it's just not your thing. You just hang out. Maybe you're ahead for the day. Maybe you're behind for the day. Maybe you just are annoyed. And if you are, you have hormones and chemicals floating in your brain. If you're behind, you're going to try to make it back. That is not the way to approach the business. Your way to approach the business is the same way the casinos do. You play your games, if you will, that have an edge, and you can't always extract dollars from the gamblers. It just doesn't fit. The market condition doesn't fit your edge. Even though you're trying to be in alignment, you're still going to pay the gamblers. It's overhead and cost of production. If you have a trade plan, and if you look at a day like yesterday, and you were aligned with it, you could, if you're in TraderLab and you have a vetted plan for it, you could add a substantially profitable day. Then you walk into a day like this, and it's like, what happened? It's because it's a completely different condition and plan. You need to know that. You need to know your strengths, your weaknesses, and where your edge is. You need to know if you have a diminished edge here, that you must honor your loss limits and protect your account. So when you have a day like yesterday where you have range, that's where you extract dollars. There are going to be days and conditions that you have a lower probability. For me, this is, in this range, is lower probability. And I always post in TraderLab, this is my least favorite condition. Now, I want to quantify least favorite. That means I take more trades because I'm trying to identify the outside edge. The problem with an outside edge is where's the high of any rotation? You see, that's what makes it more difficult. Now, if we had range, I would have more structure. But right now, look at this thing. It's just a perfect, balanced profile. So it's just running out of sellers up here, maybe running out of buyers, and you got this. I hope that makes sense. Do you guys have questions about this, about balance? Vinu, the best place to get an understanding of this process, which is really auction market theory, in other words, market mechanics, how does the market work? If you use the link in the bottom of YouTube, roll your sleeves up and dig in. It's going to take time. What this is the purest, closest representation of participant behavior in real time. It's not indicator based. It's really language based. The language of the participants. Sweeps, like this is a sweep that suggests an upside rotation. Same thing here, upside rotation. This sweep and liquidity suggests downside rotation. Who wants to trade this? You know, I don't, except I follow my plan. Now, the fact I don't want to trade it it doesn't mean I don't trade it. It means I know that this is a very difficult condition to operate in. I know the following. I'm inside of yesterday's range. I know this is an important level. I know I can come out the bottom. I can come out the top. I can do both. Or since the higher time frame trend is up, we also have potential to come back here. So I have a skew that is what? In the developing time frame, two-sided trade, pick one. And in the higher time frame, the skew is up. So I'm leaning more this side, but I trade both sides. So that time probably is contradictory because it's fractal or time frame oriented as you guys think about it. Can you learn this? Yeah, you can. Is it going to change the way you experience the market? Yes. Is it going to require you to change what you believe? Probably. Most of us think this business is indicators. I get it. I do. But it's not. In my opinion, it is really something different. And indicators are just price-based. Price is not equal. Price and volume. Because when you go to the store and somebody pays $7 for a can of tuna, and there's maybe only one person willing to do that, that doesn't mean that price or tuna at $7, that it's worth $7. It's not, because unless tunas disappear from the ocean, it's not worth $7. So the market is going to rotate to find buyers. This is what the auction is. So the market's continually rotating in all fractals and time frames to advertise price. So if it's too high here, it's going to go down, and we're going to find too low. This is retail in the developing time frame. In the intermediate time frame, that's retail. So the market is drawn back. So it can go, what's too high? Come back to fair. What's too low? Come back to fair. And then in the intermediate time frame, if this is retail, what's too high? Come back to fair. So they're inside each other. Think Matryoshka dolls, Russian dolls. And in this specific condition, I'm telling you, stepping on the rake would be more productive. Anyway, I hope that answers your question. CJ is asking, am I using the overnight session to say we are in balance? Yes. The ETH volume point of control, and this is another thing. Where did that go? Everything is, where is that? Seems like some levels are whacked here. Hold on, let me look. Okay, right at the open, 60.65 is the ETH volume point of control. So in other words, the retail price. And if you look at the ETH, it was chop. We were in balance in the ETH. So balance here, balance there. So this morning before RTH, I said, guys, balance, wear a helmet, pull out your plan, be patient, manage FOMO, be very cautious, very careful. And I post charts and I do what I can. And of course, there is no right way to trade. You just need to, I think, know the condition of the market, narrate the condition, and also define change. And we don't know change until hindsight, so nobody's off the hook on that. I do know that I have icebergs here and I had absorption. That gives me this. I know if I have absorption here and a sweep, and I meant to say a sweep up here, I can get this. I know my sellers are here and they just came back in. That can give me that. That's order flow. And this is really funky, you know. And the lean is to the upside, and it could still fall out the bottom. I mean, it's Dirty Harry say, well, do you feel lucky? Well, do you? How we doing? Well, Athen is it's balance. So nothing is mechanical in trading. We opened out of yesterday's range by a hair in yesterday's value. What that all that said to me was we're in an area of acceptance and we can come back and check either side of this thing. You know, we can come outside to either level. So out here, out here, out there. So since the higher time frame trend is up, this has more probability, you see, and we're inside the range. So that's it. Now, and it absolutely doesn't mean we won't fall out the bottom and just abuse everybody, because the possibilities, since we're in balance, is something called the neutral day also, where the longs that are in here get thrown under the bus also. So it's just really one of those days. There's nothing mechanical. And again, there is no plug and play. This is really kind of the dilemma, you know? We operate in randomness. And what we are trying to do is define the condition of the market, which is continually in a price discovery mode. What's too high, what's too low, and what's retail. So what we know is in the higher time frame retail and the develop. Notice where this is. It's right here. So we're in really, the market likes this. But if they're short sitting here, we can squeeze them. And then if we run out of buyers, and remember, we got this potentially in here, we never have to get here, and we can come all the way across the range and throw the longs under the bus. So, wear a helmet. And Ken, let's look at this. It's symmetrical. That's balance. So if you're a scalper, you could operate in this. It's not my thing. And the only reason it's not my thing is because even with order flow, I've got to enter, I'd probably be getting in this thing like right in here. And I only got that to go to for reversion. And my risk is going to be, up here. What's the point? I can do it. Where am I going? You see? Let's see if it reverts. Mean revert. And what am I leaning on? Let's come back. What do I know? Let's come back here. This is much more nuanced. Remember, this was where I had the sweep in the icebergs. And let's look. Do you see something? Do you see something? This is, I'm combining multiple elements. And this is the reversion here. And again, it could just squeeze me right out here. And now by the time I get in this thing, It's about 3 points, 2.5 points stop. Where am I trying to go? 70 and a hair below. If you observe here, you're going to see the VWAP, the mid, and the VPOC, or the retail price, are in alignment. That is the definition of balance. So out, in, problem, going, statistics favor this. How do you deal with that? See? One of the ways to deal with it is to not to trade it, or understand what you're dealing with and really have to be on your game. Because of the range, there's not a lot of forgiveness if you're late. You have to not, quote, wait for confirmation. You have to anticipate. Requires more skill because of less range, you know. I hope that makes sense. Hope you guys getting something out of this. Justin in the TraderLab is asking me, when watching order flow in Bookmap and there are orders flashing with 3 to 4 points on either side of the price, the current price, is there any edge? I've never found an edge in that. That could just be algos, and it doesn't mean anything. For me, it might for other traders who have developed an edge using that. It's not part of my thing. I am a minimalist, so I pour everything out of my process so I don't create conflict, so I can make timely. In other words, if it's like playing blackjack in the casino, minimum inputs, they just play them the same way. Well, my trades are, the same thing. So I have ripped out everything. And most retail traders are looking for certainty, so they pile on indicators and whatever else, That's human nature. Avoid risk, get certainty and confirmation. Well, what's the price of certainty? Where are you going to enter if this is where your obstacle is? You see, uncertainty, which we have anyway, might allow for better entries, less risk, and a similar outcome. If the trade fails, it doesn't matter how you get into the thing, it's still going to fail and you're still going to take a stop. Are you better off with less inputs, minimal inputs, so you have the most objective clarity? And in my primer webinar, which is available to everyone in the Bookmap Discord TraderLab community, as well as a library of webinars and structured trades like I'm sharing here, I talk about minimum inputs, or what's called anchored inputs. If you have variable inputs so that you are inconsistent in your process, then you can't measure it. If you can't measure it, then you have, with the random inputs in a random environment, then you just have garbage. You're the gambler, and you're going to still have winning trades, which is a problem because gamblers have winning trades, but they lose over time. So if you're a gambler, you're still going to have winning trades, and you're going to think that that has an edge. But you can't measure random inputs to determine if randomness creates an edge or only random outcomes. So when you have anchored inputs, now you can measure it. And the measure of a trade in mean reversion is not the same trade that you would take in a different condition or context. So this is an isolated plan for this. And you need to know in your plan why this might have an edge. And if you don't know why, then you have work to do. And I'm not saying this is the right way to do anything. I'm only saying, and because the skew is this way, why would you be taking shorts, you're going to ask me. I'm going to say, because I can, and because I know where my edge lies. I also know I can get squeezed out at any time, and I accept that. So what I need to do is enter and get risk neutral, and then play to come out the other side. And I can still come out and then come back in and return here. Either trade is correct except for being in yesterday's range. So I consider this a more aggressive short than I would at the moment getting long, but it could do anything. I hope that answers your question. It is the kind of day I want to throw a shoe at the monitor. Yeah, Alan M is saying in the TraderLab, the key to this is knowing what you're going to do before the market gets there. Most developing retail traders do not know where to look for behavior. When the market's coming up here, I already know this was important because my sellers here were here and I had to sweep. So I have nothing to do until I come back here. And then I'm looking to see, do those sellers come back in? And there they are. That gives me at least the counter rotation. That's it. And then after that, it's whatever, you see? So I can work this, but I am very conflicted because I'm inside yesterday's range. Now, the other way to think about this, these are the choices, is not take any shorts because you're inside yesterday's range. And we have a high probability of coming up here, right? You guys can watch this and then not take the shorts. And if you don't have a long, stay and park in your Barca lounger. Those are the choices. So this is a, call it counter trend short. Higher time frame trend is up. Short time frame balance. You see how the conflict manifests itself. But what's the dominant side? The long side. This is scalpy. So I'm just giving you a sense of kind of the dilemma for today. And here's the kind of the higher priority of input, other than this, is range. Inside yesterday's range. And this. So let's see, we'll see what it does. But let's see if it can continue. By the way, there's another trade here. I wanted to discuss it with you. We have a structured trade in TraderLab, which is a short from here called the IB failure. And when you come out the first hour is high and it's balanced, it's back to here. Okay, so this is a structured trade. If the higher time frame is up and the statistics favor this, what do you do about it? Well, this could be your long here or not, or you're just in park. This sets up the counter rotation. If this pulls, then it opens the hatch, and then we can come out and continue towards statistics. We'll just see what it does. You guys have questions. This is mean reversion in TraderLab. We call it is mean because it's very hard. I think it's hard to trade. What makes it really hard, I think, is what it stimulates. I mean, it is what it is, but it stimulates FOMO, revenge trading, overtrading, loss limits, you know, all that kind of stuff. Alan, I don't have any IBC for today because we're in balance. It doesn't mean you can't take an IBC. An IBC, guys, is if we break out of this again to get long here, but this is where you're going, and here. So I can't say that that's a good idea. It's not anything I would do. And I'm not saying that's good, bad, or indifferent. Let's see what it does. So if you're like working this kind of thing, I mean, look at the range here, 3-4 points. It's like on the edge of on the edge. So Alan is asking me about longs because we have two structured trades here. We have a short called the IBF, which is this. That's fine. And we have a long from here, which is a continuation trade. However, we're in balance. I don't take this long. For me, balance is reversion trading. And I have targets here. So I have to see what happens up in here. Now, if we get inside here, then our next target is this and that. So anything can happen up here. Remember, the higher time frame trend is up. So again, not to belabor it, but this is just one. Here's our ballpark. Call it our sandbox. This is the higher time frame. Trend is up. This is a trap for the shorts. Nice, thank you. This was yesterday. Lovely. Value is there, that yellow box. 70% of the volume took place there. This yellow line is where the retail price in this day was. The day where everybody got trapped and we hit our downside target, remember, is here. Well, in the higher time frame, if this is too low, which was longs yesterday, and now I'm trading at this, what have I done? All I've done is work in this. So the possibility is to come there and there. So that's it. I don't have anything else to say about it because I'm clueless, because I just don't know. I mean, how can you know? Casinos can't know what's going to happen. How am I going to know? Here's what I do know. I know this is resistant. That's as deep as this gets. And I know I got stops above here. And I know I got targets and I know I'm in the range. Then I throw my hands up just like you do and go, what? This is what? Yes, Ethan, we are in balance because of where we opened. And if I show you the posts from this morning, which I'd like to show you guys what's going on in TraderLab, and this is available to everyone. There's no cost. There is a link in the bottom of YouTube if you lean that way. I got to get back to this morning. What time is that? 10. And it's a community, by the way. We support each other here. There's nobody has what you might say the holy grail. And this is an advanced process. So what's going on here is the community is it's really like-minded traders. It doesn't matter how long you've been trading. What matters is it takes basically the community to do the work, data mining, all this kind of stuff. Let's just see here. What time is this? 8. This is prior. Mean reversion. Today, we're opening out of balance from yesterday's RTH, but in balance in micro composite, higher time frame. This is where vertical integration comes in. We might consolidate the last 2 days and balance out. Market is long from yesterday, so potential abuse on both sides, starting with longs, which means the rotation down. But that is only potential. It might be an equal opportunity to get abused from both sides. Guys, at the moment, overnight VPOC is on top of microcomposite VPOC. Somebody just asked me a question about balance. Do you have a plan for balance? How might you trade balance? What is your specific plan? Observe the rotations from Friday, Monday, and today's ETH. What is the condition? What are you planning to do on the open? You see, these are the kinds of things, and this is all posted before the open. Be aware of the current behavior. What have we done so far? Rip the longs on Friday, rip the shorts on Monday and today, right? Be aware. And this is that higher time frame. I post this. Notice the behavior over here. Okay. Now, guys, there's no holy grail, and certain conditions of the market are more difficult than others. This is the primer webinar, and I always want to give a shout out to Ned for curating this for us. If it wasn't for Ned, we wouldn't have this available to all TraderLab participants. This is the primer webinar. It's a high-level overview of this process. It's got about 33,000 views. You might want to check it out. Meet the TraderLab. This is an advanced trader education portal. Now, advanced doesn't mean complicated. What it means is it's probably different than what you're doing. We all start out in the same place. We all think it's a business of trend lines, moving averages, indicators, and whatever. You know, pivots, Fibonacci, Elliott wave, Gann, doesn't even matter. Gaps, value gaps, whatever they've come up recently to try to describe behavior that's been happening since before we even were able to do bar charts. And they were bar charts before candles. It's all the same. A lot of it's wrapped in new wrappers for marketing, but it's all the same. Most of us start out with plug and play, and we think the market is defined by time frames and indicators. There's nothing wrong with believing that, except maybe that's not what the market is all about. Maybe it's really something else. And if you have winning trades, remember where the short was, right? Where are we trying to go? Mean reversion. Do you want to trade this thing? By the way, the TraderLab community, the reason there's a community, there's data mining, research going on, mutual support, psychological alignment, and of course, I share my experience. My background is managed dollars, sat on trading desk, have helped coach a lot of traders, develop trader development over the years, and went down the same path as you, and I have the tire tracks on my back to prove it, because I kept doing things that had random winners, and I thought it was just make it better. I want more winners. Boy, that seems logical. But suppose it isn't about more winners. Maybe it's about process, and process is what generates the edge to get more winners, not tuning and tweaking indicators and timeframes, which, of course, you know, with the random winners, you think that's all you got to do. I get it. We all do. Stop gambling, start winning. Definitely watch that one. And then there's Caught in Trader Groundhog Day. I made that up for myself because I kept doing the same process and waking up in the same place. Random winners and even random, winning weeks and even winning months. And back when I was managing dollars, it was across multiple asset classes. And the day trading was not really what was going on. I started in 1980 and I started managing dollars about 5 years, 4.5, 5 years in, and then built trading systems because I was a trend follower. And in the big S&Ps, swing trader, so 2 to 3 day swings. A lot of that had to do with the volatility was a lot lower back then. So, things change. But I'm saying is that's kind of where I came from. Now, there's also a library of webinars, a glossary, tips of the context, the condition of the market. How do you adjust to the current condition? This is not plug and play. It is not one size fits all, because in the TraderLab, you would recognize the potential context. If you recognize the context, the plan is specific to the condition, and that's rotational mean reversion trading. And of course, as we say, the fly in the ointment is that we're inside yesterday's range and we have statistical probabilities that favor upside. But that doesn't mean you don't trade both sides. Library of streams, understanding mental obstacles, auction market theory. What is this auction market theory? And PDFs of 60 structured trades that you can reverse engineer. There's no mechanics in this thing. It is plug and play. These are things I shared over the years. I'm not a vendor. There's no cost for this. And when I threw these together, it was because traders were saying, what are you doing? Some of this is research. I work with trader bookmap developers. And, worked on some of the stuff is in the current add-ons. Others have got thrown, as they say, out the window. And that's research. So TraderLab is about research, trader support, understanding that this is a business and it is not romper room. It's a community for serious traders. It's about the business. If you're interested in the business, you all have an open invitation to TraderLab. There's no cost for it. The only thing that's required is that you're serious. There's loads of romper rooms out there, and that's okay. And there's trade calling rooms too. If you want to learn to trade, you have, I think, a very good opportunity to find out if you're suited for this business. And it doesn't matter what plan you have. What matters is you do the work to understand when you should engage because you have a statistical edge and when you shouldn't. Because we're not here to gamble. We're here to take intelligent risk when the statistical probabilities favor us and not the gamblers. And yes, you are going to pay the gamblers. Can you see why this is mean reversion? And can you see why this would be, this is the mean. That is the mean. Are we going to take out this? Clueless. Are we going to take out both sides? 30% probability to take out the first hour's high and low. Do you feel lucky? I don't know. Where might we go? Here. See? Balance. Step on a broomstick. More pleasant. You guys have questions. I hope you're getting something out of this. And I understand you're looking at this probably going, where's my airplane sickness bag? Please give a like, by the way. We have to deal with what the market offers and attempt to align with vetted trade plans. If you don't have a plan for this, I can suggest you don't trade it. You just observe it, reverse engineer it, research it, develop conditional statements so you can recognize it. And the market also, here's the other part about this condition. The market goes from directional movement to rotational movement. And then it can go from rotational to directional because it releases the energy. Balance is like a coil. You know what coils are, right? Compression of energy. And what it's doing is we're coming outside and then rotating in and abusing equal opportunity for tire tracks. Coming outside. So the longs are in this legs are getting taken out. We come back here. Their stops are under here. Now the longs are in here. They're getting abused. The shorts are in this leg. Now it can come out either side or both sides. We've already, and I posted this morning, balance, anything can happen. The trend is up, but if we can't get going, then we can come out here, and that sets up down here a neutral day and then come right back in again. So your trade plan would know that, but like all of us, we don't know. Will it do it? From where will it do it? There's your joy of trading. 100% random, 100% of the time. Your guide is your plan that has an edge. If you don't have an edge here, your job is to work on your crochet. I hope that makes sense. Please give a like if you're visiting in YouTube. I hope you're getting something out of this. This is not my favorite condition. Everybody knows that in TraderLab because of the problems it presents. Short here, short here, short here, mean reversion. I mean, these are good shorts for me. This is the IB. These are called mean reversion trades. This is the IBF. Return to this, and these are in those 60 PDFs of structured trades. I show these are reversion trades. Then, if we come out the bottom, this, what's under here? Stops. What's under here? Stops. What are these guys doing? If you're long, are your teeth chattering right now? Are you hitting the sell button and the sell stops are coming out? You see mean reversion? TraderLab, if you're following, not only should you review this, you got to tear this apart. This will get you. Now, what's the other thing about mean reversion? In a directional market, it's the same, except if we were trending, if you want to say, or moving and having these kinds of consolidations sequentially, going up the food chain, then when we rotate out, you'd only trade it from one side. Same. If you can learn to trade this, you can potentially develop more advanced processes. If you cannot trade mean reversion, you will have a hard time sustaining yourself in this business. In the TraderLab, I always suggest, and every trader, it's up to them whether they follow my suggestions, that they learn to master this. because this requires an understanding of context, because they're not all equal, developing discipline, managing FOMO, honoring loss limits, and defining change from this condition to directional. All those pieces are what are required, in my opinion, in my experience, to actually have the ability to develop sustainability. Without an understanding of this, which is difficult, how can you participate in other conditions? Because you need to recognize balance, and the market moves directionally when it comes out of balance. Well, hold on. Making trouble here. Does that make sense, guys? Can you see the short? Can you see the rationale? And can you also see the rationale for eventually going higher, but we can just never do it. We can just come out here instead. And if we come back in, subject aside from news, by the way, where is our support? Sweep. This says potential counter rotation. We got to watch out here now. Okay? Back to the mean. If it is, yes. We're in balance because multiple fractals opened in the same place. Microcomposite VPOC is balanced in the intermediate time frame. The overnight volume point of control, I think we opened wherever it was, like, we're right here or right there, I think it was. Same. I mean, they're right by each other. Now, let me give you the other thing that it was interesting. I want to mention this to you. This is yesterday's retail price. ETH high, found too high. I was looking at this, and I have to tell you, it was a bit of consternation, because in the last auction, which is the ETH, this was the fair price in yesterday's RTH. It was too high. Really a dilemma. And we opened barely outside of yesterday's range. So that kind of statistically sets this up. But in the ETH, this is too high. What do I do about that? I'm confused. Which is okay. So it really is conflicted for me. So I was taking shorts early, thinking that maybe if this is too high, because we already checked it and we're outside of value, maybe this. But when we came back in the range, it scrambled things for me. I don't mind telling you that. I'm giving you the straight oil from the can. I'm not one of these gurus that only gets it right. I am conflicted. So what I'm doing is I'm using the most immediate information in a conflicted intermediate time frame. So I have conflicting inputs. Fair, maybe too high. Inside range, back here. If not, back here. And I still have a 90% probability-ish taking out either the ETH high or low. I also have a 90% probability-ish taking out either the ETH high or low. I took out the ETH high. 30% probability of getting down here and taking this one out. So look at the conflict. Am I going to get up here? Am I going to come down here? I already checked this. Too high. That. And I didn't get in here yet. Possibility to go here. Possibility to go here. Possibility to come out here. Possibility to get down here. And I don't know. That's, quote, the straight oil from the can. Are you guys with me? Hope this is making some sense. Yeah, Chirac, the It's hard to work the longs, and I think it's really just try to work the outside edges. And but here's a very strong recommendation to TraderLab. This day, you can figure this day out and develop processes, conditional statements, and using the processes I have shared, structured trades. You can participate in this, but you cannot underestimate the challenge of trying to pick outside edges. That's like trying to pick the high of the day. Not so much, as they say, but this is the last short. That's a short, that's a short. I mean, look at it. So now we're looking at this, and maybe this, and maybe this. Remember the targets, but you got this liquidity stacked here. Anyway, guys, I hope you got something out of this today. Please give a like if you're visiting in YouTube. If it was up to me, we'd have a more interesting market. Yeah, Greenie, we have news here, so you don't need to post those. Most of us know that, but thank you. Everybody should have a squawk for news in these conditions. There are 10-second delayed squawks, or you can go real time. I used to have a floor squawk box, back in the day, because, before the internet, naturally, and streaming. But I think you could do okay with the slight delayed squawk news, for tweets and, reports and stuff, because now we have news algos. They respond immediately and we can't respond. So in 10 seconds, they'll be like, what happened? Then you go, oh, okay, now I know. So up to you. You have to do what resonates with you. So please give that like. Neutral. Going for neutral day. And I hope you're seeing something here that's useful. If you find this interesting and you're interested in potentially developing a plan, build a career in the business of trading and sustainability, not saying this will work for you. You really will have to roll your sleeves up. There's a lot of support in TraderLab. It's a group of like-minded traders who've come together to leverage their collective experience. I'm active in there. I don't call trades. It's a waste of your time. You need to learn to trade. And it's not replicate what I do or anybody else. There's a rhythm to this that will align with your psychology. I will suggest scalping is not the answer. Range is the answer, because you have to get paid for your risk. And we all have losing days. We all are going to hit our loss limits. And if this is not your thing, a day like today, you just need to work on it and better define it, do replays, build a plan, extract an edge before you trade in this. Because otherwise you're sitting with the gamblers. And if that's the case, I always say go to casinos, get the cocktails and the ticket to the buffet. At least you know you're gambling. If you're gambling here, that's your choice. And I hope if you have that experience, that you decide maybe do something else. We're getting our sweep right here. Please give a thumb up again on the way out. Thanks for visiting the TraderLab. I appreciate your interest. Feel free to use the link in the bottom of YouTube if you're interested in TraderLab methodology. It's a superior community, in my opinion, and it is available at no cost. Thanks again, guys. Have a super day. Trade safe. And if you don't have an edge, come to TraderLab. It might differentiate your long-term outcome if you're interested in building a career in the business. Take care. And don't forget that like on the way out.